Only the hardcore investors understand this.
So the 10-year interest rate, the Treasury, the 10-year note that the Treasury puts out is basically what all money is kind of based off of in terms
all
of
of our
borrowing,
real estate debt,
right?
yeah.
And that has been coming down, which in turn mortgages have been coming down, right? The interest rates way down to 3.25 or something like that.
Yep, low threes.
Yeah, low threes. And within just the last week or two, it's skyrocketing over 4.
Yeah, vertical.
So I woke up this morning because I am a geek and I check the 10-year Treasury every morning. I'm like, wonder what's going on here. And that's why we're sitting here, because there's a conflict there.
There is.
And why is there a conflict? Why is the interest rates at the Fed going lower, but the Treasury 10-year is going up?
This is a phenomenal question. Only the hardcore investors understand this. And this is something that you need to pay attention to. The market moves on the rumor, not the fact. Did anyone ever spread a rumor about something in high school and all of a sudden you're dating 29 girls and you're in trouble for something you didn't do? The same thing happens in the stock market. We trade the rumor. So what was happening is coming up to the Fed's cut, the market is pre-pricing in the rumor. They're betting the rumor's going to happen. Well, what does the stock market always do? They always overbet. So they overcompensate for what's getting ready to happen. Half point, quarter point, they baked in more than that right up front. Then the Fed actually surprised us. The market was baking in a quarter point. They gave us a half point. And then rates rise right after that. That actually always happens. The reason it happens is, once again, there's rumor and then there's fact. But the Fed does also not directly control the 10-year. We did a whole other video about the factors that affect interest rates that you guys can go watch that'll explain this at a much better level. Historically speaking, I should say, it always rises right after the Fed cuts rates. And it pops back up, and then the market realizes, okay, this is comfort, and then it slowly ticks back down again. So as long as it doesn't have more than a 50% retracement to its previous level, so think of it like a J. If this is its previous level and it comes about 50% back up, what it will do is it'll hit a support and then it will naturally continue in a downward direction. If it goes above 50% of its previous level, expect it to possibly establish a floor and then move up from there. So most likely, this is going to bump against this little ceiling it's currently hitting right now, and then it's going to slide down again. Now, there were other factors that came into that. We had some jobs data that came out that blew expectations out of the water. Once again, in my opinion, over-exaggeration. Where did all those government jobs come from? Like, come on. It said there were hundreds of thousands of college students employed. Show me hundreds of thousands of college students that are employed. So once again, I always like to dig below the surface. We know that's coming down, but today, because interest rates went from 6.1 to 6.7, what do our buyers do? Go, 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 go. Okay, you can reach us at resg.com because we're telling them this is a buy signal. P.S. It's going to get cheaper over the next 45, 60, 90 days anyway. Let's go put things under contract. So generally speaking, the market pre-prices in the rumor, the event actually happens, boom, it pops up, and then it kind of just slowly floats back down again. And it will do it again in November, and then it will do it again in December. Once the Fed starts, we're tracking down though.